So it's my distinct pleasure to introduce Markus from Deutsche Bank. You know, as we've been going through the day, we've talked a lot about firms that have these kind of long traditions in products and services, but are clearly facing just tremendous disruptive innovation. And I think Deutsche Bank is kind of a classic. So founded in 1870, 100,000 employees, operating in 70 countries. You can only imagine the complexity that that entails. And then to also have to grapple with increased digitization, I think is sort of one of the challenges that faces many firms in the room. So Deutsche Bank is a member firm of IDE and is actually working with us on a research project looking around governance and regulation in platform systems. So we're very fortunate to have their Chief Digital Officer for Private and Commercial Banking. Markus should feel right at home here at MIT with a degree in industrial engineering and then a doctorate in finance. And small tidbit, similar to Steve, races fine German automobiles. So please welcome Markus.
Yeah, Jeff, thank you very much for the very kind introduction. Ladies and gentlemen, it's a great pleasure for me to be here. I feel truly privileged to have the opportunity to present now our experience, our journey from services to platforms. And I can tell you that we are in Deutsche Bank are really excited about what happened the last years in our industry. And especially we are excited about how this will bring us to. So Deutsche Bank, quick introduction. I think one of the global universal banks, top 5 investment banking, top 10 asset manager. And I'm responsible for the digitalization of the private and commercial banking. And this is the place where we in Deutsche Bank started our digital journey about 3 years ago. Now you will say, oh, why only 3 years ago? Yes, from a perspective of 2014, it was the second best time to start a digital journey in 2014. The best would have been 2007, but as many as you know, and I think that's not typical for Deutsche Bank, that's for all banks, that there were some years where we had to handle the financial crisis. And that was the reason why we then kicked off our journey in 2014. Overall, the bank plans to invest about 1 billion in addition into digital, thereof 750 million into the private and commercial banking. And I got very often asked, is budget the issue? And as I will elaborate later on, budget has never been the issue. The issue for us as a bank was to build up all the digital capabilities, to bring all the people, and we already have heard a lot about developers. How can we bring these talents to the bank? And when we started, as mentioned 3 years ago, it was very important to have some guidelines, because when you're from Germany, I think there are 2 topics in business where everybody has a perspective on it. First of all is soccer, and second is digital. So it was very important to say, okay, what means digital for a bank as Deutsche Bank? And the first guideline was we have to transform both in parallel our core business, and also we have to invest in a couple of strategic growth options. Why do we have to do this? Because there is no separate budget of 1 billion where we just can say, okay, this will be available for the next years. We have to earn that from our core business. So the core business must be profitable. On the other hand side, and that was the most trickiest point from a cultural point of view, as an industry that is in the midst of the biggest crisis, where efficiency is all over in the agenda, to say, now I do a couple of investments where I do not know whether they will be profitable or not. And so this was the first point. Second one, client relationship is of utmost importance. It's not the balance sheet anymore. Could we imagine that there will be a digital bank that has no balance sheet? Yes, for sure. Can we imagine that we have no balance sheet? I don't think that is realistic in the short term or the midterm, but it's very important to have this different kind of view on what is the key factors of success. Third one, you have to be relevant every single day. That is the most challenging one from an operational point of view, because banks' products are typically not relevant every day. But if you're not relevant every day, you're irrelevant. So this is the third challenge. The fourth one was advice. Typically, as a bank, you say advice is in a branch, that is physical advice. Yes, we still believe that this will be important even in the future, because when do your customer research, many customers in Europe say for very specific cases, like building a house, it's very important to have an advisor. But for sure, there are many, many different occasions where you do advisory totally different. Especially a great question was when we discussed, do we do peer-to-peer advisory? A very difficult point for a bank that is about 150 years old, that you do not say that all the talents, all the capabilities is within the bank, but also customers can do that peer by peer. And the fifth point that goes into the classical business model, if you look into a balance sheet or in the P&L of a bank today, you have classically three different business subunits. It's a deposit business, it's the credit business, and it's the investment business. And the key question was, will be there a fourth pillar, like digital services, like platform businesses? We definitely believe, yes, you have to, because an industry has to grow. As a corporation, you have to grow, and there are so many opportunities in this area. And then when we got our journey started, we couldn't do all at once. Unfortunately, there are not these three silver bullets, how to become digital as a bank. You have to digitalize your entire value chain. And we deliberately say, yes, we have to start with the customer experience, because if you don't create this great customer experience, you will lose the customer contact. And if you lose the customer contact, it's not meaningful whether you have great digitalized core processes or you can think about any kind of new business models. So that was the reason why we started there. And let me give you one example of what we did. We came up with a totally new kind of app generation. Now, many of you will say, okay, an app is nothing special. I fully agree, if you do it the classical way. And the challenge we had is that European customers don't say, look, this is a great banking app. They just say, is this a great app or not? So this is a totally new kind of competition that you have to face when you're a bank. So it was very, very important to really come from the customer point of view, to really design it end to end. And therefore, the app we came up, what is specific, this app looks different for every customer, because you can decide what kinds of functionalities you want to have in that app. Because there are customers, they are just doing investment business. They don't care about daily banking. And there are customers, they say, I only do daily banking. I'm not interested in the rest of it. And the second point is, in these days, if you're doing any kind of business with your bank, you must be a customer of the bank with all the AML, the know your customer stuff, and so on. We will skip that. You can use this kind of functionalities beginning at the end of the third quarter for everyone. So it's open, it's for prospects. And then the third step will be beginning of the next year. We are about to provide kind of software development kits that we are not the guys who are building new kind of services, but we are doing it like many of the tech companies are doing it. We are just giving it out to the public, but there will be some standards, because what we also learned is that the customer says, where's Deutsche Bank on the outside, we expect Deutsche Bank in the inside. And so therefore, we are about starting our platform journey here. And the reason why I've presented here is that this is a very fundamental part, that you go channel by channel here and think about what do I have to do in order to be ready for the platform industry, revolution. But coming to a big picture, I think we are about to see a really tectonic change in the financial services industries. The first point I already mentioned, the GAFAs were raising the bar for client expectations, and it's not sufficient to say we are good as a bank. No, you must be good in total. What is, from my point of view, the most disruptive point, it's on the regulatory trend. Maybe when you are from the US, you may be not familiar with it. In Europe, we have something that is called Payment Service Directive 2. That was initiated by the regulator, who said, look, I want to increase the competition between the banks and help the fintechs in order to provide great services for the customers. But that is not limited to banks and to fintechs. It's open for everybody. So there will be new services like account information service provider, like payment initiation service provider, which can be done by everyone, giving that the customer gives his consent. So there will be a total new kind of competition. And the days where you can say as a bank, look, I have the account, that's it, they are over. And this is not effective today. This will be effective beginning next year. But this is, from our point of view, the biggest disruptor from a regulatory point of view. And secondly, on the technology side, I think we already have heard a lot about artificial intelligence. The question I got asked most often is, what is my perspective on blockchain? As I'm a guy from the private and commercial banking business, blockchain is not my top priority. I think blockchain is a big topic for the colleagues in the markets and the custodian business. Somebody who is working in the advisory business with end customers. An industry that is so much based on cognitive tasks, here artificial intelligence is of utmost importance. And that's the reason why, for example, we started a cooperation with IBM Watson, because we believe somewhere in the closer future, there will be contact centers or call centers where you either have highly trained advisors, these are true experts, or you will have AI-based machines, and they're doing the rest of it. And this is only one example how the value chain or also the business models of banks will change over time. And we look to the right-hand side of the chart, the tectonic changes. I think it's very obvious that we are facing totally new competitors. And I'm not concerned about these fintechs at all. Lots of discussions, what will be the fintechs do to the banks? I think many of the fintechs are much more tech than fin, so I'm always a bit surprised when they ask me what fintechs mean to us. I think there are many of you who could answer the questions much better than I can do. Secondly, most of them started as B2C business. In the meantime, in Europe, most of them are B2B, so we did a lot of great corporations. Where we have our focus on are the other big players in the financial service industries. First of all, the insurance companies. If you think when the last time you checked your online banking, and when was the last time when you checked your folder of your insurance company? So I think they have a structural issue, and that's a big advantage for banks, because here we can also provide this kind of services, which was called, I think 10 years ago, bank assurance. We believe in a revival of bank assurance, especially for property and casualty businesses, because this can very easily, first of all, be digitalized in terms of the product, and especially AI will significantly help to do all the advisory for this kind of products. Next point are the asset managers. I think in these days they are our partners. Maybe if you take all these discussions about robo, I think they are about becoming our competitors. Because especially when you are in passive investment products like ETFs, there are margins 5, 6, 7, 8 basis points. You cannot pay another party who is doing the sales or the advisory stuff. So for me, it's very obvious. And I think there are some great deals here in the US, like BlackRock, who acquired Future Advisor. This will be the future. And so this we also have a kind of competition, but it will be also partners, because we are doing the robos on our own. And the ETFs we are putting it, they will come now from the big asset managers. And finally, I think banks, and that was the reason why I mentioned at the beginning, many banks started their journey in 2014. We had lost a couple of years. And I think we have to stop, say, oh, others will enter our industry. We have to start thinking about what kind of service can we bring to our customers that are outside the classical banking services. Because I personally believe we have many assets here in the industry we should have to leverage much more. I think before we heard the question to Alexa, who is the former leading consulting company, I asked 3 leading consulting companies, McKinsey, BCG, and Bain. By the way, I would have hoped that Alexa says McKinsey because I'm a former McKinsey, but unfortunately it didn't. The 3 of them told us 30% of the revenues in the banking industries will be gone for the companies who do not invest in digital, who will not invest in these new kind of technologies. The other way around, there are many opportunities for the market leaders. And I think the banking industry is highly fragmented. We don't think that there will be a winner takes it all in short term, but we truly believe that there will be very much market consolidation. And therefore, it's extremely important to have many digital capabilities within the bank. And this was, by the way, the biggest challenge I had in my position over the last 3 years. It's not so difficult to find 100 people who say, oh, in my eyes, digital is great. The key question is how you can inspire the entire company. And here just 5 examples, kind of tectonic changes we see over the journey of the last months or years. I think the first one is very obvious. The banking industry, maybe even we were leading in technology 30 years ago when you had these mainframe computers. Unfortunately, this position was totally lost in the last years. And the muscle we trained now for 20 years, back-end integration, unfortunately is not that important when it comes to digital and it comes to platform business. Second, we have these classical siloed IT teams. And the business says, I want to have this, and then it's ordered by the IT, and then the IT has to deliver. So this was the big challenge, really, to bring people back together to sit in one team and drive the digital solutions. And my favorite one is that on product management. And when you're in a bank, you have product management for deposits, product management for credits, and they have all one thing in common. They are producing their own products, period. The most important thing is managing internal processes and handling the guys from regulation and compliance and so on. But now, when we open up our platform to third-party products, you need to orchestrate partners. This is more a B2B business than a B2C business, and therefore you need totally different kind of capabilities. Fourth point, also a great one. I think the industry is telling now for 20 years we are doing multi-channel. I hate this word multi-channel, because channel is never the perspective of a customer. No customer wants to be channeled. Customers want to have access, and this is therefore to say what is omni-access and how is this truly digital first. I think the industry is also famous, and I joined the industry 8 years ago, building up advisory tools for the advisor in order to be more productive. So this we are doing year by year by year. The first thing what we changed is 2 years ago. We did an advisory tool for the customer that was designed by the customer, that was sent, given online, and is now brought to the branches. So this is the other way around, and I think this is also just another example how you have to change the capabilities and mindset. And the most difficult one is when it comes to management and steering, because as a bank you are famous or you should be good at risk management. And if you talk to somebody from the risk management department, credit risk, this guy always tells me, look, Markus, out of 100 credits, 99 must go well. If I take this ratio for innovation, it's done. By the way, the other way around, it would be also not so good if the credits guys say, look, 2 of 10 credits should work well, then we would have a different problem. But I think this is very important that here you have totally different kind of perspectives. And these are just a couple of examples to give you a better understanding. What are the changes when you have these 100,000 people, when you try to get them moving towards digital? And I think that was when I got the question, what is the biggest achievement? What is the greatest innovation? I never answer with this innovation or that innovation. I think the most important thing was now to have hundreds, maybe even thousands of people who are already on this kind of journey. And I think this will bring us forward. As we believe that digitalization is not an upgrade of the IT, this is the revolution of the strategy. You have to totally look different on what is the strategy in banking in a digitalized or in a platform world. And we also believe that the banking industry will become a platform industry in the near future. So what is our strategy? First of all, if you take the x-axis, you have to take all your today's business and you have to digitalize it. We like to name it, you have to digitalize the banking, like you do mobile, multi-banking, I'll come later on, kind of new products like a digital discretionary portfolio management, but also chat co-browsing, and I can share the experience. AI-based chat in banking is still a big challenge, but you also have to do building up new kind of businesses, new kind of platforms. Banks have great data that are not leveraged so far. But also there are some assets like security, like identity management, and there are a couple of examples I have in my presentation later on how we can bring our business model forward. First of all, you need a strategic view on your value chain. And what we clearly see, digital drives power to the ends. I think one that is obvious, it's on the distribution side, the relationship management, where it's about brand and trust and the network effects. But also, I think there's a role banks can play on the origination because there are some skills on risk management, on identity management that are extremely helpful in a digital world. What happened in the last 6 to 8 years in the industry? Very much about production, product management, transaction. It was about scale and efficiency. And it's totally right to have a focus on efficiency. But unfortunately, that will be not sufficient because on a global scale, there will be only a couple of banks who could go for infrastructure play to say, we have the most efficient processes. For the other, it's of utmost importance to have the customer relationship. And that's the reason why we always say, we are very open for all kinds of corporations. We are extremely looking for fintechs, but also for big platforms. But the customer relationship, this is the ultimate premise. This has to stay with the bank. And this is somehow the basis for a kind of business model we have laid out throughout the last 6 to 12 months to think about what is the core of a digital bank. It's not the account anymore. especially when it comes to PSD2, because then the account is just a kind of commodity that sits behind. But you need the customer contact. Therefore, the multi-banking is now is very important, the digital wallet, the digital identity, so that the customer has everything at one single click on one single view, anywhere, anytime. Second, then the customer has financial needs. And if you believe in platform, and we do, you have to open up your product shelf. That's the reason why we have launched in Deutsche Bank last week a retail deposit marketplace. So when our customer come to us, there are also retail deposits products that are not only from Deutsche Bank. And that was kind of a revolution, because it's kind of obvious that when you go to your bank, you get a deposit product of your bank. And that's not only for deposits, that's the same as for the insurance business, where the digital insurance broker is one of the topics. So to really deliver on the promise to have the best financial solutions implies that there are products that are not from Deutsche Bank, but they provide access to a portfolio of different banks. And thirdly, when it comes to beyond banking services, the open API, what we do at Deutsche, we do not only do the standard API, we have to do by regulation in January next year, there will be a much broader API, there will be many, many APIs, so that third-party developers can use the data that is there in order to come up with a kind of an app store for our customers, like for contract management, for tax advisory, and all this kind of stuff, because we believe there could be a really value add for our customers. And when you think about delivery, I think only the first and the second layer could be delivered by classical branch business or by classical omni-access business of a bank. The third one, I think here, it's the big time of the artificial intelligence and all these kind of technologies. And then, from my point of view, you as a bank, you're really daily relevant, because you have services where the customer visits you every day. And that is so important in order to build a business model. And I think there are some big strategic advantages. First of all, when you have a digital bank like that one, that is less capital consumptive, so it's much more profitable. Second, you have a totally different business mix. You are not that dependent on the interest rate curve. And third, there are so many strong growth portfolio options, and therefore, this is somehow the intellectual framework we are currently building on. So maybe 5 minutes on the different innovations, because what is for me always very important in many conferences, in many debates I had, I think people are always communication long and a bit in implementation short, and when it comes into the banking industry. And I think therefore it's just important to have these things live. One example is multi-banking. Our customers can see all their products, so credits, credit cards, investment securities business, regardless whether it's from Deutsche Bank or from a different bank, they can all see it in their banking. On all devices. And by the way, if you go to a Deutsche Bank branch, the branch advisor also have the information if the customer wants to, and can do then the really comprehensive advisory on that one. And here's a very, very strong first mover advantage, because 75% of Germans said, we will use this service, but we will use it only once. So when the customer decides to do the multi-banking with your bank, it's somehow locked in. And that was the reason why we did not wait until regulation will become effective on January next year, but that was the reason why we launched on January this year. Second point, one of my most favorite ones is this kind of retail deposit marketplace. German European customers, they are really hunting for good interest rates, even if it's only 10 or 20 basis points higher. Then they are open up accounts by the competitors, moving their deposits there, and this is kind of interest rate hunting. On the other hand side, thanks to regulation, there are things like liquidity coverage ratio, net stable funding ratio. So here the regulator forces banks to be much more robust on their liquidity position. And what is especially beneficial is for investment banks and for wholesale banks are retail funds. So now we thought about how we can bring together, on the one hand side, the interest rate interest of our retail customers, and on the other hand side, the need for financial funding of the investment banks. And that was the reason why we came up with this kind of retail deposit marketplace. So now our customers will be able to invest in different kind of deposit products. And this is, by the way, highly beneficial for the overall industry, because in these days, every bank is doing their own onboarding, every bank is doing their own KYC process and so on. This is not necessary anymore. And the big advantage from a customer point of view is, by the way, there are some deposit marketplaces out there. But this one is curated because we decide which of the partner banks are allowed to put their money into the marketplace, and this gives also kind of a quality stamp for this entire marketplace. Let me spend a minute also on robo-advice. I think very often people believe that on robo that everything is done by the machine. From my point of view, that's not true. The key lever for strong performance of the robo-advisor is the asset allocation. And so far, the asset allocation is done by human. And therefore, it's very important that you have this kind of capital market expertise, which especially global banks have. Second, it's the algo, all the daily risk management and the optimization. I think here banks are also very strong. And the third one, this is this kind of customer journey. And here I think it's very good that there are the fintechs there that could help us and do the onboarding, the profiling, all this stuff. And I think this is another good example that in a platform business, not everything has to be given to third party. That there are some parts where you just have your core USP, where you have your core strength, like the asset allocation, and this you can bring to the party. And that's the reason why we will now launch our own robo-advisor by the end of August in the German market. And I would skip that one, had already that one, and would like to spend on the last example is that on an identity platform. I think we heard really great speeches and there's great work done here. I'm a big fan of the platform solution from Jeff and from Marshall. And when I read the book, one thing came to my mind, and that is many industries are not digital that much as many would think about. For example, if you're a bank customer, you open an account with a different bank, you have to run through the total legitimization process. Same holds true if you do car sharing. If you have a car sharing company on the one weekend, the next weekend, same stuff again. And the key question will be in a platform economy, what is the role of the digital identity? And will be there a kind of platform that will provide this kind of digital identity? And what we came up here in Germany, and the next step will be Europe, to build up this kind of digital identity where you can store your identity, and this can be transferred for this kind of services you want to use as an end customers. And one experience is that one single company will be not big enough to build up a platform like that one. And that was the reason why we joined with Allianz. This is the leading insurance company. With Daimler, one of the leading car companies. Axel Springer is the leading media house. I think Deutsche Telekom is here more known as T-Mobile. And from each of in every big industry to have the leader in order to bring together all these different kind of use cases, different kind of customers, for sure fully compliant with European data protection regulation. And I think what is very, very important is we gave back the data to the customer, so the customer can decide on its own on which services, which kind of his data can be used. Now, this will be only the first step. The second step will be that we will transfer it then to machine. And I think this is then the big play for the European industry. I remember the chart of Jeff in the beginning where you see that Europe is that small in platform business, and unfortunately that is true, especially on social media and that stuff. But I think the European industries like the car manufacturers, like the big chemical companies, our key challenge will be what is our role in a platformed IoT economy. And I think therefore this kind of digital identity is just extremely important. The product launch of the MVP will be in September. And I'm really looking forward to that one because now digital is not a kind of tool or app or anymore. Now it's really a strategic industry game. And in order to be here in front of these industry games, we as a bank have institutionalized our research and development. Now, many of you will say, I mean, this is nothing special, right? If you are from the car industry or from the chemicals. But so far, I haven't found any bank P&L with a line that is called expense for research and development. When you speak to capital markets analysts, banks are assessed by cost-income ratio, by return on equity. I have never been asked by what are your expenses on R&D in % of your revenues. And especially when we are in a world where technology is that important, where innovation is that important. That was the reason why we said we need research. Therefore, we came up with 4 innovation labs all over the globe. With some partners like IBM in the Silicon Valley. And on the right-hand side, we built up the kind of digital factory. There we have 450 developers, UX designers who are doing all the digital stuff. This is the nucleus for much more. And I want to say thank you very much to you, Jeff, because I think many of the discussions we had were very influential for our overall strategy, and that was the reason why I always put here our cooperations with the MIT on the charts. So this as a brief overview about how we believe that the banking industry will change. I think nobody in banking knows how banking will look like in 3 to 5 years' time, but we definitely believe that there are many opportunities, many assets in the banking industries that you can bring to the party. And now I'm very happy to take your questions. Thank you very much.
We've got time for one question. So,
right. Steve Segarra, Archibus. I'm still trying to wrap my mind around the whole change management process. If you could speak to just one thing, though, is that you had to value customer relationships in dollar terms, right? Because you have no R&D budget. So you're justifying to a company that doesn't want to spend money and doesn't want to take risk based on a dollar value of a customer relationship. How did you come up with that dollar value?
We haven't come up with the dollar value, frankly speaking, so far. I think the big change for a bank is what we did on the discussions is, I think we were great on business cases. I haven't done many business cases over the last 2 years because what we see now is such a tremendous market consolidation that either you are the consolidator, and then I think you don't have to worry so much about your calculation because then you have great opportunities, or you're still doing the calculation. Unfortunately, the others will take the market share. So that was the reason why I'm not so a big fan on it. When I have to go to the board, they always say you have to have a kind of business case. Then I always write 3 different scenarios and say, look, this is the game changer, this is the profitable investment, and this is unfortunately the failure. And then everybody has to decide what he has to believe in.
Thank you.
okay, so we can actually take one more question, and I think we had one right here. So.
Thank you. It's about theory versus implementation that you said before. In technology, you said you will be using APIs, blockchain, and artificial intelligence. So I suggest a competition between human and artificial intelligence. You feed your data into the machine for new whatever insights,
Yeah.
and then you use your data and programs and you tokenize them, crypto tokenize them. You open it to the community of humanity, of thinkers, and then see which one brings you more value and innovation. And I believe that the human intelligence will win.
I think this heavily depends on the task you are asking the AI or the human. As mentioned, I'm not so much about competition for the blockchain, but I think these are very fair questions, especially when it comes to advisory, to say who can understand the customer better, what can artificial intelligence can contribute. And I think you always have to divide between the content, the market expertise, but also the empathy and the personal relation between the customers and the banks. And my perspective on that one is many customers go to the bank because of the personal relation. And when I got the panel right, there is no so much help from AI to be expected over the next years in terms of this personal relation, which I think is good and is right. But there could be very much help more on maybe on the asset allocation, also on this kind of advisory. First point of my answer. Second point, I'm not so big fan of competition because I think machines could help us in the combination with human to answer questions better. And I would be a bit concerned that if you put it as a competition, that people will be not that open in order to really see the big potential that is in the technology.
All right. Thank you so much, Markus.